Hello everyone, PS from PS Invest Plays here today. After peaking in early 2021, SoFi Technologies stock has been on a roller coaster ride. Year to date, it has risen 19%, but since November, it has shed 37%. Has the stock peaked, or can we expect higher stock price in the future? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So, stick around. I think you'll like what I have in store for you today. SoFi Technologies, ticker SOFI. SoFi. SoFi is a mobile-first fintech company. Its platform includes lending products like student loans and mortgages, as well as financial services like money management accounts, which is SoFi Money, brokerage services, which is SoFi Invest, credit cards, which is SoFi Credit Card, and access to third-party insurance products, which is SoFi Protect. American consumers currently face intensely siloed choices for financial products. This means that there is a dependency on a plethora of different apps and companies for financial products ranging from loans and credit cards to insurance, wealth management, and savings. It's understandable as these all have material TAMs or total addressable markets worth north of $2 trillion annually. SoFi differs from this as it aims to build a singular platform in a strong attempt to serve all the financial needs of its members. The stakes could not be higher. This is a land grab with the winners standing to take most of the value. When fintech eventually matures, what's left standing will be the companies with intense scale and most of the consumers. In this sense, SoFi's strategy to build a super platform to bundle disparate financial products simultaneously exposes them to multi-$100 billion TAMs or total addressable markets, which aggregate to create immense downstream revenue. This has meant the company guiding for a 43% 5-year compound annual growth from fiscal 2020. SoFi expects 2025 revenue of no less than $3.67 billion, with the most dramatic growth coming from its financial products and Galileo. While it is hard to forecast future market sentiment, an 8x to 12x price to sales multiple at the end of 2025 would not be beyond the realms of prudence and would see the company's market cap trade up significantly from its current value of $12.11 billion. In 2020, SoFi acquired Galileo, a technology platform that allows financial companies to provision digital banking services. For example, Galileo makes it possible to issue physical or digital debit cards, create deposit accounts, and process payments. Several well-known fintechs rely on Galileo, including Chime, MoneyLion, and Robinhood Markets. The breadth and simplicity of SoFi's platform gives it an edge over many other rivals, and that has helped the company grow quickly. In fact, SoFi's member base has accelerated for 8 consecutive quarters, and the number of products used by those members has grown even faster. Collectively, that tremendous engagement drove revenue to $231 million, up 101%. As SoFi continues to build its singular platform, its market opportunity is at $2 trillion, meaning it has plenty of room to grow its business. To that end, in March 2021, the company submitted its application to become a bank holding company, and it entered into an agreement to acquire Golden Pacific Bank. once SoFi has a national bank charter. The resultant synergies should supercharge its business. The company currently relies on bank partners to provide money management services to SoFi Money account holders. But with a bank charter, SoFi could provide those services directly. In turn, that would allow it to fund loans with customer deposits, meaning lower interest rates for borrowers and higher interest rates for SoFi Money account holders. That would not only create value for members, but it would improve the unit economics for SoFi. This is the reason why SoFi could grow tenfold over the next decade, becoming a $180 billion company. SoFi made a solid comeback in the third quarter, ending September 30th, 2021, after a disappointing second quarter performance, as both revenue and earnings surpassed consensus estimates. SoFi added 377,000 new customers in the third quarter, taking its total membership count to 2.9 million. The company is prioritizing market share over profitability, as is evident from its plan to reinvest 70% of the incremental revenues back in the business. The company has also been successful in its cross-selling strategy and has increased total products offered by 108% year over year to 4.3 million in the third quarter. SoFi accounts for the total number of products and services under this heading, often including several different offerings for each customer. SoFi expects to be granted a national bank charter by the fourth quarter, subsequent to the completion of the acquisition of Golden Pacific Bancorp Bank. The bank charter will give SoFi access to cheap capital and reduce loan origination costs associated with third-party banks. With lending business accounting for over 77% of the company's total revenue in the third quarter, improving loan margins will have a significant impact on SoFi's bottom line. Like fintech company Lending Club, which holds a bank charter, SoFi Technologies will also be able to retain a part of these loans on its balance sheet as investments. The resultant net interest income will add to SoFi's recurring revenue base. SoFi's partnership with Pagaya Technologies gives the former access to fintech-oriented proprietary artificial intelligence and machine learning technology and a robust data network. This should help the company better assess borrowers' default risk and make optimal underwriting decisions. In addition, Pagaya boasts a customer retention rate of 100% since its inception in March 2016. With a history of increasing volumes by over 6 times for its clients within 12 months of partnership, this deal could be a game changer for SoFi. Looking into 2022, the continually extended student loan moratorium, which paused federal student loan payments and temporarily set the federal student loan interest rate to 0%, is set to expire on January 31st, 2022. While another extension was ruled out, this was before the emergence of the Omicron variant. Hence, there is a risk that this date is pushed back yet again, as the White House is currently being pressured to take such an action due to the economic uncertainty posed. This is a salient risk that SoFi shareholders need to be aware of, as it would represent a potent reduction of a huge driver of upside for the next year. Paliha Pitia of Social Capital announced on November 18th that his fund would be selling 15% of its stake in SoFi so that it could allocate capital to other opportunities. The market never wants to hear that a respected, high-profile investor is reducing their stake. Additionally, SoFi also announced a secondary offering of 50 million shares on November 15th. These weren't shares being issued by the company, but rather a mass sale by major shareholders including SoftBank, Silver Lake Partners, Qatar Investment Authority, and Red Crow Capital. That represents more than 6% of the company's total outstanding shares. These are big names getting out, and it predictably created some negative sentiment around SoFi. Large investors selling is never a good sign, but it is important to keep this in perspective. Social Capital, for example, is still retaining 85% of its investment in SoFi. By all indications, these investors are taking an opportunity to realize their gains at high valuations. It is not indicative of poor performance on SoFi's part. Looking at the financials for SoFi, revenue, gross profit, operating income, net income, and EPS or earnings per share are increasing quarter over quarter and year over year. SoFi is a lot cheaper to buy now than it was a couple of months ago. It is still a high growth company with clear catalysts for even more expansion. Its price to sales ratio is only 14, which is attractive in today's market for a company that delivered 35% annual sales growth in its most recent quarter. With its stock price decline, its sales growth has become too cheap. I think investors who have a long-term investment horizon should take this opportunity to buy the dip. This is also indicative in the charts where I see the stock price to experience some further pullback before it increases considerably in the next 4 to 5 years. Now, let's take a look at the chart of SoFi Technologies. Sorry for the interruption, but I wanted to take a moment to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's get back to our analysis. Looking at the chart of SoFi Technologies, the bull run that started in early 2021 is still not over. It has completed its first wave, and now wave 2, which is a corrective wave, is in progress. Wave 2 is typically a 76% to 76.4% to 85.4% retracement of wave 1, which means there is an accumulation range of $12.75 to $14.39. After this corrective wave is completed, I expect wave 3 to resume, and wave 3 is typically 161.8% of waves 1 to 2, giving us a short-term price target of $43.70. After wave 3 is completed, I expect wave 4 to resume, which is typically 23.6% retracement of wave 3, again giving us a short-term price target of $36.74. After wave 4 is completed, I expect wave 5, which is the final leg up, to resume, and wave 5 is typically 61.8% of wave 1 and 3, giving us a final price target of $60.21, which translates into a 372% profit in the next 4 to 5 years. Now, let's summarize. At its current price, I would recommend that you nibble any pullbacks and accumulate corrections. For me, the accumulation range is any price between $12.75 to $14.39. After this correction is completed, I recommend that you hold SoFi stock for the next 4 to 5 years, as I see a price target of $60.21, which translates into a 372% profit in the next 4 to 5 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.